So guys, in the previous lesson, we were able to establish the fact that Forex is the largest financial market in the world. And then when we mean, or when we say that this is the largest financial market in the world, we are trying to say that $6 trillion is being traded in foreign exchange on an average day. So that means that for 24 hours every single day, on an average trading volume, $6 trillion is being passed in these markets, traded, is being exchanged generally. Okay, and this exchange is done by governments, financial institutions, hedge funds, retail traders, all of the volumes between companies and all of these bodies that we've been able to point out are being put together, and then the average that we expect for a single trading day is $6 trillion. That's way higher than what we have in the stocks markets. That's way higher than what we have in the cryptocurrency market. Okay, and then it asks the question, what does Forex mean? So basically, Forex is an abbreviation for foreign exchange, okay? And then this will now relate to you a whole lot more. So when we talk about foreign exchange rationally, that means that an exchange is being done between two countries, okay? Because that has to do with foreign, yeah? And then if an exchange is being done between two countries, payment has to be made. And if payment is done, that means that we are indirectly exchanging a currency for another currency, okay? So in essence, foreign exchange is the global market that allows us to trade currencies at the end of the day, okay? And then these currencies are being traded in pairs, so you cannot just you cannot trade one standalone currency by itself and make money. It has to be paired with another currency, and then what you trade or what you do with that currency or what gives you profit is the speculation of what happens to one of the currencies. So if you feel that one of the currencies is going to gain strength at the end of the day, or it's going to get weaker than the other currency that it's being paid against, then from that exchange, from that idea, you now determine what kind of exchange you want to do. Do I want to buy this particular currency and take this other currency and hold it for some time, and then eventually if it gains strength I'll make money, or the reverse? Okay, so the decision that you take with regards to what you believe will happen to a particular currency, when it's paired against another currency, is what eventually gives you money in the foreign exchange market. Okay, so we trade two currencies based on your view of the strength of a certain currency paired against the other. And then in terms of returns, this particular financial market, the foreign exchange market, provides more returns to you than every other financial market in the world. So if I go on to the next slide, this is an example of the pairs, right? You can see to your left, you can see GBP USD, and that is Great British pound and the US dollar. So they are being paired together, and the price is being quoted for you. So that price is, if let's take for example right now GBP USD. So if I come here, GBP USD, and it's quoted for you at a price of 1.1000. So we'll go deep into the quotations, the prices and everything. But then if you see a chart on GBP USD and it's quoted at 1.1000, that means that to purchase one Great British pound, the prices are quoted with USD. Okay, so the currency that you have to your right hand side after the slash is here, right? So USD, JPY, CHF, CAD, USD, GBP. The currencies that you have to the right hand side right after the slash are the core currencies, and the ones to your left are the base currencies. More on that later. But then the prices that are quoted for you in foreign exchange are being quoted to you in the prices of the core currency. Okay, so if you have GBP USD being quoted at 1.1000, that basically means that to be able to purchase one GBP, you need 1.1 USD to be able to buy it. So if it was higher, it's going to be the same thing. If it was 1.1500, okay, so 1.1500 or 1.1500, that means that to be able to purchase one GBP, one Great British pound, right, to be able to have one Great British pound, or to be able to exchange one Great British pound to US dollar, this is what you are going to need. This is the value you are going to need in US dollars. Okay, so these are examples of currency pair quotes that we have. We have Euro USD, which is eventually Euro and US dollar. We have USD JPY, which is US dollar and Japanese yen. We have USD Swiss francs. We have USD Canadian dollar, Australian dollar USD, and there is a whole lot more because we have exotic pairs, pairs that are not traded, every single day. And they rake in a whole lot of volume, and they move in one direction for a really long time. We have exotic pairs, we have minor pairs, and we have major pairs. So you have a whole lot more pairs that you are going to look at, such as the Mexican peso. There's a whole lot more, right? But then these are just a few examples of currency pairs and how they are being quoted for you on your foreign exchange trading platforms. So let's move on to the next lesson, guys.